Great, ladies and gentlemen, I'm delighted to welcome three fantastic panelists for this afternoon's last panel session before we go into our final fireside conversation with Mr. Vigello, who will be joining us shortly. We're also going to make the audience answer a few questions this time before the panelists kick in. And I'll ask perhaps if we could have already the first question for the audience on the slide while I introduce the panelists quickly and set the scene. So feel free to get going while we do the preparations here. So on my right, I have Dr. Thorsten Pötzsch, who I'm sure many of you know and who requires very little introduction. Thorsten is the Chief Executive Director for Securities, Supervision and Asset Management at the BaFin. On his right, Björn Storim, who is the CEO of BNY Mellon SANV. And for those of you who might not be familiar with that, the SANV represents the part of BNY Mellon, which is BNY's largest banking entity in EMEA. And then immediately on his right, Torry Berntsen, who is the CEO for Europe and Americas for Standard Chartered Banks. So welcome, gentlemen. Pleased to have you here. So I'm going to do a little bit of scene setting. Of course, a lot has already been done today. And I think the challenge for all of us is that we can have the audience leave this conference with a little bit of optimism. And I don't think it's not a small challenge. And indeed, Pascal Donahue also launched a specific challenge to this panel, I think, by asking us for our ideas, you for your ideas, on what might actually move the dial in the coming few years when we go into the new EU legislative cycle. This morning, Christian Zewing mentioned a figure or some figures, and I have slightly different numbers, but it's the same message. Of a period of about the last 20 years, EU market cap as a percentage of total global market cap has decreased from about 18% to 10%. I think Christian Zewing mentioned something very similar. What I wanted to just add to that was also to put it in to put it in perspective a little bit, that at the same time, EU GDP fell as well, which I think we all expect and understand, but it fell less than the share of our corporate's market capitalization. And I think this shows that in spite of the attention that has been paid to developing capital markets, the recognition of its benefits, at least sort of intellectually, we still have an issue. We still have this equity gap. And at the same time, as all the other speakers have been saying, we have unprecedented investment needs for economic transformation, a highly indebted economy, and yet capital markets that lack that attractivity, they're fragmented along national lines. And we also have what I would see as being and describe as being a bit of regulatory and policy rigidity because of our institutional setup. So that's the challenge that we face, and we're going to hear plenty of ideas of how we could overcome that. Just before doing that, though, I wanted to start, and indeed the panelists themselves wanted to start by looking back and reflecting on the current CMU agenda. What has been achieved, what progress has been made. I think bearing in mind also that there are some open files on the table, but we also heard Pascal Donahue saying that there is a very clear call from all of the leaders that this agenda needs to be finished now. So let's assume that the agenda will be completed within the coming months. So question for the audience and then for the panelists is, how do you assess the sort of progress made on the high-level CMU objectives? And these are more or less the headings under which the 16 or so initiatives of the current CMU action plan would fall. I think we've got the results in. It seems that the audience thinks that the most progress has actually been made in supporting companies' access to public markets in the EU. I won't read through the various other ones, but the least progress made in terms of integration into a general single market I think sort of if we take the top one and the bottom one, that probably already gives us quite a bit to reflect on. And gentlemen, if I could maybe turn to you, ask you in which areas you think we have or will make the most progress once the current legislative cycle is finished. Where do you think we've made the most progress, and what does the sort of audience consensus inspire in you? Thorsten, may I start with you?
Yeah, sure. That's a very interesting result. If I take a closer look at it, the fourth question, integrating national markets into a genuine single market, seems to be an overall judgment on this whole topic. And if I'll judge that, I think we're right in the middle of it. So therefore, something like a 2.5 will be fair at the current stage. And I very much hope that after having finished the CMU action plan 2.0, it will be a 3 or a 4 out of 4. But let's see how that works out. That would be the general stance to that. If I look at the other questions, supporting companies' access to public markets in the EU is indeed a fact that we've made a lot of progress, and with the EU Listing Act, we will make a lot of more progress as well. So therefore, that's fine to me. And now what we're all will face now is the retail investment strategy that is due to come up tomorrow, I think. It will be publicized. I think there will be some very, very important points on that as well, so that the overall outcome will be fair enough as well. But I think one thing is very important in this overall issue. The thing is that we have to strike the right balance between more regulation on the one hand and clear regulation and liberal and cooperative and competitive capital markets as well. We have already had more than 20 legislative acts in the last 20 years regarding the financial markets. These were all fine, and a lot of them are very, very important. But you have to ask yourself the question, well, you had to ask yourself the question 20 years ago, do we need a regulation? The answer was yes. Now you have to ask yourself the question, do we have the right regulation right now? Or do we take a step back and look at what exactly will be the right regulation for the future? So the question is not, do we need more regulation, but do we need a coherent regulation? And do we somehow have to change the regulation and not regulate more, but regulate more precisely? I think that's the main issue and the main challenge that we're all facing. I think I'll stop it.
Thank you for that. And interesting, we'll come back in the second round to maybe hear your ideas specifically on how we could do that and where those tweaks and precision might be needed. Björn, be interested to hear your reflections, of course. And I must say, I find the first one quite surprising. I personally wouldn't have chosen that one, particularly also when one sort of is aware of the debate and the focus, whether it's sort of in the EU or in the UK for that matter, on how companies who do want to go public are actually doing that outside of Europe. So any thoughts on that?
To me, and good afternoon to everyone, thanks for having me. To me, it's a bit of a surprising result as well. I would share your view with Jacqueline. Yeah, I personally would have put probably attracting capital across and into the EU on a higher level. I would echo what Christian Saving said this morning with the fragmentation of the markets, with the share of capital markets in the European Union as a share of global capital markets decreasing, and we are just looking towards it. I would also probably share what Pasha O'Donoghue just said right after lunch with the highly fragmented market, as he classified it. Yeah, that would be my first assessment on those ones.
Where do you think we've made the most progress? So you said attracting capital across and into the EU. How have we been successful in your view in doing that?
Generally, there is a framework that works, yeah, generally, yeah. But there is, when I look at the overall capital markets union, and let me stay with capital markets union, because banking union is a different kettle of fish, and I'd like to see us advance the capital markets union first before we come to the larger successes done in the banking union. capital markets union still has a number of big holes. If we look at it from the vantage point of BNY Mellon as one of the greasing wheels in the financial market system, I would like to call us, right, as the world's largest custodian. So I think we are pretty weak still in bringing together 27 member states when it comes to cross-border investment, particularly on equities, not so much on that, but particularly on equity investments, right? And if you try to bring together what we heard throughout the entire day, I mean, Yves just was excellent in pointing out, if we want to make the economy a green economy in Europe, and if that is our objective, and if we know that we need, whatever the figure is, you quoted 650 billion per year, take a very solid or even a high triple-digit billion figure PA per year for the next years to come. Given where the public spending situation is right now, it's inevitably clear that this money has to come from private sources, right? And not only from within the European Union, hopefully, but in an open and fluid market, also attracting outside of the European Union money into the European Union, because we're kind of leading the torch, and we are on many of the, if you think, regenerative energy questions, for instance, right? I don't think we're yet fully there. When we look into just a simple example, cross-border tax certificates. Right now, whether you're a retail investor sitting here in Frankfurt and buying a share of a Swedish stock, it's a pretty onerous process to get tax credits for the withholding tax certificate. And even more so, it takes a lot of time. And, you know, it's often months, not in Sweden, but bad example maybe, but in other countries it does. And if you, same holds true, by the way, for the institutional investors, we're right opposite of DWS here. Same holds true for them. And not only is it onerous and lengthy, it's also 26 times outside of your own country, 26 different processes. Now that is something we have to align. And whenever I mention that, just as one example, harmonization of tax certificates, everyone says, a tax is hugely complicated. You can't deal with that. And you can't force the countries to have the same tax level, but that's not even what I'm asking for, or what I'm after. The tax levels itself could be different. What I'm targeting is processes, and that's where we would come in, by the way, as a player in the game. And we should do much better on that. And that's why I would be actually more negative on how much have we achieved. This is just one example, tax harmonization.
Absolutely. Okay, we'll come back to you. Thanks, Björn, on your ideas for also how we might be able to improve things and move forward. But Torry, if I could come to you, and of course you have international experience, would be great if you could sort of compare and contrast also with other jurisdictions and where the EU stands compared to those. And also maybe reflect on clients. I mean, Björn was talking about institutional investors. I was reading a report by AFME, quoting a survey of even the largest institutional investors, who one would assume have the greatest degree of sophistication and capacity. They simply do not see the EU as a homogeneous marketplace. Is that something that you that you see as well with your clients?
Yeah, maybe we could have those questions.
If we could just go back to the response, thanks.
Yeah. So I would agree with everything that's been said. If I look at number 4, I would say that's integrating national markets. I think that's pretty accurate. One could even make an argument that that's. I think the comment was made sort of 50% there. I'd say maybe there's a range there of 40 to 50%. So I think that's something that we have to continue to be focusing on, especially on a regulatory standpoint. I think if I look at number 1, that actually seemed high to me. But the offset to that is there's a number of things that are going on that I think is very positive to build on that. I think the consolidation table for equities, where you bring 14 various exchanges together, I think that's a real positive. I think that'll help grow from that standpoint. I think the single access point for ideas on companies, both in terms of performance as well as from a sustainability side, I think that's going to be a real positive. And if you compare it to other markets, I think the Listing Act will have a definite strong impact. I was part of a company that used the Jobs Act in the US. And that was something that was very powerful to bring companies more to market in a quick way. So I think over time, I can see that support, some of the things that have been done, especially since 2020, where these things have really started to come to light. And I think that's a real positive going forward. So I would have said probably those numbers in one would have grown over time, but we'll see. And I think that there's a chance for them. You know, the attracting the capital across and into the EU. I know there was a comment made about insolvency before and some of the things that going on that. But I think that's going to be still important to come to some kind of solution on that, especially for the debt markets. And so it's a matter of looking at the debt and the equity markets. But again, to sort of wrap up, I think since 2020, there have been some movements. And I think it's good for the EU, and I'll go back to that Jobs Act comment. I think it's good for the EU to look at what other jurisdictions, other areas are doing. And equally, I think that when we get to climate and some other things, that the places like the US and Asia need to look at what the EU is doing. So I think it's regulatory convergence can exist on the local level within the EU, but it also has to exist on a global level.
Absolutely. And again, another theme that we'll come back to. But well, thank you for that. Thank you for being our voice of optimism and also drawing everybody's attention to the fact that the Commission really did a stellar job, of course, in terms of the different actions that it did put forward in the 2020 action plan. And some of those projects, ESAP, consolidated tapes, we call them at AFME de facto integrational. I think those are really things to look forward to. Of course, we haven't felt the effects yet. It's still work in progress.
I think there'll be
that will,
if you can do them right, there'll be a real positive, which should make one grow more.
Yes, absolutely. Okay, thank you.
I would share that view towards the end, actually, of the current 5-year cycle. We probably, you just mentioned a few of them, we'll probably see more than we would have expected a few months ago, right? ESAP is a good example.
Yes,
the tax harmonization, we've been singing that song for a long time. We're now finally, end of June.
Let's see. Hopefully, insolvency was another one.
We wanted to be positive, right?
Absolutely. And there were two parts to Pascal Donohue's challenge. One was finishing what we promised for this term. So I think that is very important. And of course, the insolvency harmonization, which Alexandra Schroeder mentioned, the Commission would have liked to have gone even further. Is probably modest in terms of what they would have liked their ambitions to be. But of course, we were also, other speakers were discussing that this is not in the purview of the sort of ECOFIN and the finance ministers. But I also think that Pascal Donohue's message in terms of completion, it also originates from the leaders. So we're talking about the leaders of the member states. It's not about the finance ministers, the justice ministers, etc.
The one other thing I would bring out here is we're talking about debt and equity here, or equity markets or whatever. Historically, the European markets have been very bank focused, and there have to be ways to diversify from that, and whether other forms. I know securitization was mentioned before as well. But it all goes back to the fact that not having that over-reliance on bank debt.
Yeah. Okay, let's go to our next round and our next audience poll, questions for the audience, which is to ask you for your views. And you've got one choice here. What should the EU's focus be on over the next 5 years? Says voting closed. There we go. Voting is open now. So sorry, if you voted a few seconds ago, please try again. Let's give it a few more seconds. If you're not on Slido, slido.com, the code is EFI in capitals 2023. Okay. Interesting. I wasn't expecting this one either. So First choice, streamlining infrastructure and centralizing supervision to overcome national interest. That, I think, is the option which is sort of the most integrationalist in terms of using policy making tools, I think. But let's hear your views on that. So reflections on what you think the audience thinks. Let's do a quick round then, and then I'll come back afterwards to ask you where you would put your focus. And this time, Torry, if I could start with you.
I'm not surprised to see that. I think the centralizing of supervision. I think there was some reference to ESMA before on that. I think that's key from that aspect. I think especially when you move down from the ECB and you're getting you need more convergence on the regulatory side. So I think that's a key one, and the overcoming of the national interest. So I'm actually not surprised to see that that's the top one.
I think it shows maybe that at least this room is a room of people that won't be giving up and will be sort of carrying the message. Björn, what are your thoughts?
Looking at it, I would have expected it to be a bit more balanced between what came out as number one, which is centralizing supervision, and then what I would group together, pension challenge and cross-border investments. But overall, I would agree, Torry. And Andrea and Ria reflected upon it when he sat here just a couple of hours ago and looked back at what he described and what I would echo: 10 years of successful single supervisory mechanism for the at least 100 plus most largest banks in Europe. But there were a lot of questions in the room, including, and I'm not pointing out to mine, but there were a lot of questions on it, and they were exactly around that situation. Yeah, so we've made great strides. I think we all would say it's much better than it would have been before, that it was before a single supervisory mechanism, where national interest certainly either prevailed or at least were thought to prevail, which is equally bad from a market's perspective. And we overcome that to a very large degree. And you see that anyone who had the pleasure of being regulated by the JSTs, it's very diverse, very multinational teams reflecting the European Union and its broadness. That part is good. There's still stuff to be done. I mean, I pointed out the fit and proper process in my question, for instance, which just takes awfully long and is not conform to market. But still, I would agree. Anyone in that room who is in that seat on either side of the table, I guess, would see the advantages. And we'll come to the other one.
And I agree, a lot of progress has been made, but again, that doesn't surprise me.
Progress still to be made. Thorsten.
That doesn't surprise me as well. If I take a closer look at it, we'll have streamlining infrastructure on the one hand and centralizing supervision to overcome national interests. Now, there's twofold subjects. If I'll focus on the second, centralizing supervision to overcome national interests, that is funny because we're talking in a world where you have the SSM, the SRM already, you have the ECB, you have EBA, IOPA, and ESMA, and yet there is more need and even more thrust to centralizing supervision. That is very, very interesting. But
ESMA has relatively few supervisory powers directly. Sorry to interrupt.
Yeah,
but just
I
as
know.
you know.
Well, it depends on whom you ask. But I think still you have two different shades. The first shade would be, do we have the right legislation in order to have a centralized supervision? And the second part, are we in practice as supervisors acting in a very coherent way? If I'll move to the first one, do we have enough centralization regarding the laws and regulations? I think we have quite a number of laws and regulations that are focusing towards that. And I don't know if I would say I doubt it, but I think we already have a lot of regulation in that area. I think the main task lies in this second area, that we really have to harmonize, that we have to integrate the supervision, that we all have to act, that the supervisor in Cyprus acts the same as the supervisor in France and in Germany. That is the main critical issue that we're having. If you get a license in Germany, it shouldn't be much easier or difficult than in, you name it, in Greece or...
I would totally agree.
Or whatever. That is the main question, because if you get allowed entrance to the market on a very low level, and then you can spread via the European passport all the nice stuff that you're selling, then that's a completely different issue. So therefore, that is the main issue and the main question for me. And I think we should focus on that point, not on the legislation bit, but rather on the integration, the harmonization of the actual supervision. And I think that's already what I know it from myself, being a member of the board of supervisors at ESMA and being at the management board as well, that is one of the key elements that we are focusing on for the next 5 years.
You could make the you asked before about different parts of the world, but you could make that argument in the U.S. as well. You obviously have the Fed, but then each of the states has their own regulator.
Yeah.
And there's a case that could be made is regulator in one state looking at things the same way as in another state. And obviously, I'm not going to name any states, but some states are going to be more stringent or more deeper as well. So I think it kind of goes along the same line. It's not necessarily an EU situation. Anytime you have a big federation, it's going to have something to that effect.
Mind you, there was one question 1 hour ago where one lady, I think, asked, I don't know who it was, 42 different regulators within the EU. And I immediately asked myself, well, that was from an American bank. I'm not quite sure.
It was.
The
name was on the question, so
I wonder how many regulators does this bank have in the United States? And I wouldn't be surprised if that'll be at least 30 to 50 as well.
Fair point. Yeah.
That doesn't make it better here, but making the argument that
it becomes a global type situation.
Yes, it's absolutely a global situation.
But the goal is clear, isn't it? And we would agree, I would hope, as we're trying to be optimistic, that the goal is a common market, right? And the goal ought to be, you have 27 currently member states of the European Union, and if someone is getting a license in one of the countries, then the basic assumption should be he or she can passport freely into the other 26 countries, right? Right now, on some of the matters, we don't see that, for instance, and that clearly hinders. One example is depot passports within the European Union. 27 member states, right now, you need still a depot passport in every of the 27 countries to be active in. You cannot passport from one central depot passport that you have into the other 26. And that clearly draws up borders, right? Because what are we going to do if we look at the European map, right? I can tell you straight away, we can even point out to names. I'm not afraid, you're not doing it on the US states, but we cannot set up a depot bank in Estonia. And that's not because we don't like Estonia, but that break-even calculation will never work.
Mind you, sometimes it's very difficult to transfer from one German depot to another German depot. That might even take more than 3 months or use it.
And that we should address as well. That is
we have addressed that.
That's a technical thing more than but on the licensing side, you see, I mean, our starting point would be, the starting point needs to be, there is a common European market. You get a license in one of the locations and you passport into the other 26.
So let's move on to the sort of part 2 of this round, which I think is, what would you each suggest in terms of the area of focus? And Thorsten, you were saying at ESMA, the sort of convergence aspect is top of ESMA's list. Maybe you'd like to elaborate a little bit on that, and indeed anything else that you would like to add from your own perspective for the next mandate, next 5 years.
Well, we've asked ourselves at ESMA because, of course, I can't tell you about any internal discussion that we had at the ESMA Board of Supervisors, but we all were of the same opinion that we have to harmonize our ways. So therefore, in order to have that, to get a better harmonized supervision, we have peer reviews. I don't know if you know that. I presume everybody knows that. So a couple of our colleagues go to other colleagues in other member states and ESMA staff as well, and we take a closer look at how the current practice is working. That is one very interesting tool, and that helps a lot when you're trying to find out, are we having, are we all applying the same measures, are applying the same tools? Mm-hmm. Are we working at the same speed, for example, because speed is very important. Speed and equality of treatment if it comes to applications and if it comes to withdrawal of applications. So therefore, that is one of the 3-4 main issues that we are having there. And we agreed on a couple of tools how to get this done even more properly than we've had in the past.
I think that would be extremely helpful. It would be, in my view, I think really useful to have that sort of convergence work, the peer reviews kind of step up a gear. And I wonder if you're able to say anything in terms of whether or not ESMA and the NCAs together have enough resources dedicated to peer reviews, exchanging best practices, secondments, etc. Whether we need any sort of KPIs, some sort of disclosure on that, would that help?
If you ask any company or any supervisor, do you have enough resources? The answer will always be no, I don't have. But the real correct answer would be you have to do a risk calibration. What are the riskiest parts that you're having, and then work on that. That goes without saying. So therefore, that is the correct answer. And I know we all have limitations as the FDIs are concerned and number of stuff is concerned. We all know that, but all in all, I think we're not completely understaffed. Let's put it.
My question was specifically on whether you think collectively in the supervisory community whether there is enough or could be more resource dedicated to the convergence part.
No, because I think convergence crops up in a number of different areas, and a lot of people are working in these different areas. So we don't have only 3 people working on this convergence issue, but you have sort of 100 different topics, and every single topic which is related to ESMA deals with convergence, because we all have to agree on this particular topic, A, B, C, D, E. So therefore, convergence is sort of the overarching melody that's around the whole kind of supervision that we're having. So therefore, it is not like moving 10% of my employees or of my staff into convergence. That would be not, I think, the way looking at it.
About sort of taking I'm not sure risk-based approach is the right way of phrasing this, but sort of focusing on out of those 100 topics, which would be the most useful to spend time discussing convergence on. And as you were saying, maybe not expanding the rule book much further, but dealing with what we have.
And Mark Berntsen, I mean, he's not here right now, but you represent the BaFin. He actually had a pretty refreshing answer to that question, right? He once said, if I may quote him, BaFin is staffed sufficiently, and it's about picking the right teams, right? That was a very interesting, because the knee-jerk reaction is often more, I need more resources. Yeah. He did give a different one, a quite refreshing one, right?
Yeah. Well, we have a number of areas where we as BaFin, and of course the ESMA as well and the colleagues as well, take a closer look at it. We have the risks arising from abrupt and significant increases in interest. Of course, we've already seen that. We've had corrections from or we will take a closer look at the possible corrections from the real estate markets as well. We've taken a close look at the funds situation, how fast money will go out. We'll have the general risk of significant corrections on the financial markets. We have, of course, cyber attacks as well, which I personally am surprised that we haven't seen more right now.
I agree.
So we're pretty robust. really I really share a positive view so far yet. And we, of course, money laundering and terrorist financing, which still is a high issue, and which will receive a European answer as well.
We hope so.
Which, yes, I'm pretty sure that'll go through. And then we have digitalization, sustainability, and geographical upheavals. So these are the main issues that we're having.
Yeah.
And we take that and tackle that as the main risks that we're facing, and putting all the appropriate staff and colleagues into that area, into these areas.
Thank you very much for that. Maybe I can ask Björn and Torry what if they had one wish, one focus, one recommendation for EU leaders or legislators for the next 5 years in terms of improving capital markets.
Go ahead. Then I can copy your answers.
Thanks, Torry. A recommendation is a big word, but what I think is required for the next 5 years, then for the new commission is an effective theme in mobilizing what the Capital Markets Union is trying to achieve, because essentially you're not getting too many open doors when you sing. We maybe in this room and on the line virtually, but not in the broader public audience. You're not getting a positive tap on the shoulder when you say, hey, let's go for Capital Markets Union, right? That you don't, we have to be cognizant that you don't reach, 89 of 100 when coming up with that team. So I think it is bringing forward a theme that unifies the audience and the voters, for that matter, because then you have the politicians in the boat. And to me, that theme would be greenization and digitalization of the economy. And it comes to that point that Yves Mersch has brought up. When we're cognizant of how much money we need, and when we know that public finances are stretched or overstretched, for that matter, certainly in some of the countries, then by definition, we need to look for private capital. And then it's about how do we do that best and how do we grease that best? So it's the how then answers the why are we doing it, or the what, so to speak, right? And that theme, so greenization, digitalization of Europe for the next 5 years, leads to the fact that we all have to work on the Capital Markets Union and making that more effective. So I think it's almost, I wouldn't call it selling. Yeah, it's not a selling approach, but it is really being cognizant of what we want to achieve as politicians, as citizens, as fathers and mothers, and then working on the tool collectively to get that done.
I've described it not as selling, but as explaining the sort of making recalling to different kinds of stakeholders the benefits in terms of the public good that a capital markets union is. Torry.
Yeah, I think obviously the great answers and the whole green and climate element is key. I know we'll talk a little bit more about that, but even on the convergence, I put my risk hat on, and I thought the themes or the buckets that you outlined are key, and you want regulators to be very focused on all of those, and those are risks that I think about, and I know you do as well on a daily basis. And we want to make sure that we're working in unison with our regulators to make sure that those things are tackled, and that convergence of regulation. And again, I go back, it's just not even on the EU side, but it's on a global basis, because we're both global banks. And we're in that situation. So I think that is key. I think going back to what we alluded before, I think just the whole enhancement of capital market financing in Europe is something that needs to be continued to work on. And that fits in a little bit on the risk side from a bank perspective, in that you want that divergence from just bank financing. So I think that's key. And then there are various forms, and we talked about securitization before, and that's just one element of it. But I think that Europe needs to figure out how to really expand from a capital markets perspective. And then I think if you take it to the retail side, I think developing that financial literacy, I think is going to be key. That was alluded to before. But we all know that the retail and the private wealth, that all feeds into asset management and everything else. So it all comes full circle. So I think there are a number of things to work on from that aspect. combining the risk with different forms of raising capital, which is going to be key as well as we get into the whole transition finance and the green side of things as well.
I'll come to the audience questions in a moment, and thank you very much for raising those questions. But before going to those, I think you've been saying a lot about convergence, so promoting that further, promoting the benefits of capital markets in terms of greenization, digitalization, that those are really the selling points. There are different, now on the how, that there are different sort of schools of thoughts about that. And I think that we're probably going to come to another, these debates have been had already to some extent, but they're not new. But there is the discussion about the capital markets union sort of built top down, bottom up. What about polycentric approaches? I'd be interested to hear your thoughts on that.
That's such a general question. It's very difficult to answer. I think it's rather top-down than bottom-up approach. But we'll have, first of all, you have to define what is bottom in bottom-up. Are these the member states or the companies or the people or whatever? What exactly is bottom? So therefore, it's very difficult to answer that question.
Let me try and give a version, if it helps, a version which is a little bit more circumscribed. Let's say bottom up is sort of domestic capital markets, so capital market at the level of the member state. Top down would be EU level action. Polycentric would be specialization, centers of expertise across the union.
Well, that's in that case, it's very easy, because you have to have a matrix system, and it's not the answer. Well, it should be all on European level or all on national level or all polycentric or whatever. It depends on the particular issue and the particular question. That is obvious, I think. It's in German regulation where you have to ask yourself, do you have a state law or do you have a federal law, or do you just need an ordinance, or what is the correct level of regulation that you need? And the same applies to EU regulation. But I think more important than well, that's very important on the one hand, but much more important is the overarching theme. Do we really have the right kind of regulation, or should we rather try to consolidate the regulation that we are having now? Take a closer look at it. Well, the Mifid is not carved in stone. Do we really need all provisions that are in the Mifid or MiFIR? There are hundreds and hundreds and hundreds of regulations. We have to really carefully take a closer look at that, and then ask ourselves, do we need this kind of regulation, or do we have different economic questions right now that would, if we be on a green grass or so, would give completely different answers to that? So therefore, but simply not trying to fix that and that and that and that and come up with a new kind of exemption on this and that, but rather try to step back and get a sort of better idea of the wood than just the single trees that we're having. That would be one aspect. And sorry, just one more aspect, which is extremely important. You have to have clear regulations. Case in point, ESG. ESG is regulated or not regulated or semi-regulated in 25 different acts. This is a nightmare. It is a nightmare because nobody knows what exactly does green mean, what is greenwashing, what are the right ways to approach that, what kind of transparency do you have? You have to have clear regulation. Everybody should know, what am I supposed to do, what am I supposed not to do, and therefore we need to consolidate this kind of very patchy regulation. So that is the key element, I think.
That's very clear. Thank you, Torry.
You know, I go back to your very first question when you talked about national interests. And for me,
that's where I was going with my question.
for me, if I look at that, it almost has to be, or a big component of it has to be top down. Otherwise, how do you avoid those national interests? And I think that's probably the goal of the Capital Markets Union. And how do you get one? And obviously the audience had that same view. So whether there's elements that are bottoms up, but there has to be a big component, in my view, from top down.
Thanks.
So in my view, when you go back to the Roman treaties, and one of the core construction principles of the Roman treaty, still going through the European, so the EG and then the EU later on, the European Union, finally was the subsidiary principle, Subsidiaritätsprinzip, and that still should hold. So everything that can be done on a lower level should be done on a lower level. However, when we come to capital markets, that is probably the most fluid market that you have of all the markets, right? When you compare them to other goods, services, people, etc. That market, by definition, in my view, needs to be as broad and as open as it can be, and that would mean a top-down for that market
Also,
more
how
than
do you
anything
get to
else.
where you want to be on? And I'll just raise the question: how do you get to where you want to be on convergence without having some top-down component?
Yeah.
Do you think we don't spend enough time sort of explaining the benefits of the scale of having a single capital market?
Well, that comes to that point of the theme that I mentioned, right? I mean, as soon as you realize that you need a lot of private money to fund investments, as soon as you realize, pick an example, that offshore wind farms sit outside of Denmark, and they don't sit outside of Luxembourg because there is no offshore outside of Luxembourg, right? As soon as you realize that, and as soon as you then realize that you need free flow of capital across the borders, then you're pretty much there intellectually and conceptually. Yeah. So it is about telling that theme and uniting everyone around that common theme, I think.
Okay, thank you. Let's take the audience questions. So first one is, I think, about the various different options, private equity, public equity, other approaches. So instead of perhaps listing, are we focusing too much on listings? I'm not sure that's what's in the question, but where is there a need to place more focus on one of these areas or not?
If you want to talk about the public markets versus the private markets, one, cost obviously comes into play, liquidity comes into play, access for investors, we talked about financial literacy, et cetera. And that's why I think you're coming up with a listing act as well, just make it easier for some of those companies to do go to market. Equally, as companies further expand, to do add-on offerings and all those things become a little easier. So I think that there's definitely a space in the world for private markets, but ultimately for companies as they develop and expand, the public markets are going to be very important. And that's going to be a big component of future capital markets growth.
Which is perhaps arguably lacking, I think, in the EU. But is there a sort of limit or plateau to how many SMEs and growth companies we can take public? And what do we do in that case?
There's a lot we can learn from Sweden when we look at that question. A lot. I mean, it's a much smaller market. It's like a tenth of, we're in Germany here today. It's a tenth of, it's actually an 11th of the population, right? And the factor of IPOs is factor 10. So it's like reversed to what happened in this country and in most of the other countries as well, actually. Italy, not different, France, not different. So Sweden is really telling us something. And I think it's telling us something on digitalization, on efficiency, but also on tax friendliness of listing SMEs on the market.
And for investors and pensioners, looking at it from the...
And from investors, yeah, from the tax side, from investors as well, there is a clear incentive of that. It goes together with that pension question, right? I mean, it's not, it is a multifaceted picture that comes together. If you have an AP7, like in Sweden, yeah, and if you encourage private equity investments, then already in a country, there's a lot of capital available, right? Which is not being there. Germany is trying to change course, and we would applaud that, right? The Aktienrente is something dearly needed, and if you look at that, that's a major deviation in changing the first column of the pension retirement systems. 10 years for 10 billion each is 100 billion, plus the accumulation. You're quickly coming up at 150 billion. That is maybe not sufficient, but it's a major step in a direction. So I think we can learn a lot from Sweden.
Going back to, and I alluded to it before, the financial literacy, that's something that needs to be taken up to those smaller companies as well. And the fact is, whether you're going to do a intricate private transaction or a public transaction, there's a lot that goes with that, and it's educating those companies and making sure that the advice given is that they are the right size, they have the right infrastructure, they've got the right reporting mechanisms. Equally, it's not cheap to do some of the things that we're talking about. So financial literacy can be expanded above what we were talking about before.
Absolutely, thank you. So we haven't mentioned the sort of post-Brexit situation yet. And I think that here, this is a, hopefully now we're at an inflection point, and we can look forward to, if not at all, the same sort of relationship that the EU and the UK had before. At least now there is a formal prospect of cooperation. What do you think that, well, what would you hope for that cooperation, and what do you think both sides could sort of learn from each other and show to each other, including in terms of their regulatory frameworks?
We would love to be as closely coordinated as technically possible, right? Because Brexit is nothing else than fragmentation for a financial market, and I mean, I'm not shy of saying that, you know, the June 16 thing was not only for me and my family bad, it was bad for the financial market, right? As a whole, all we banks had aggregated our businesses in London, and you know, we've been speaking about it last night. All of us had for years now to deal with what we had to deal because of a political decision. It's not because we wanted it. It's not because the regulators wanted it. It's because there was a public vote and we had to deal with the consequences, right? So we would like to be as closely aligned as possible to the UK. Saying that, recently, Joachim Nagel, the president of the Deutsche Bundesbank, traveled to London, and then I was part of that small group of people going with him to the House of Parliaments and the House of Lords, for instance, right? And as soon as you, of course, hear, yeah, but we're not taking any orders from the outside and we're totally autonomous, obviously that would show you where the borders or the boundaries of that effort lie, right?
I think we all have to be realistic. It's pretty obvious. United Kingdom is no longer part of the EU. Full stop. So therefore, different set of rules, and you can try to come up with something that is similar or the same, but that will not happen in the future. There will be deviations. There will be differences. That is obvious. So therefore, the question is, what kind of regulation will we see in the United Kingdom? Will there be a race to the bottom on particular bits or not? Or will it just be different? We don't know yet because it's too early, still too early to judge that. But the closer the regulation is to the EU regulation, the better the cooperation will be. That's pretty obvious. And I think an MOU on regulatory cooperation is wonderful if you have it. But of course, the closer the rules are, the better it is.
And hopefully
that goes back to what we were talking about before, just on the convergence of regulation on a broader scale, and that echoes the point. I think the other thing is, and I agree with everything that was said, clearly the Brexit banks were moving operations to the continent, and that's something that we have to do. One has to look at some of the timing on that, which of those things happen, and how we continue to do it. But those are things that are all being discussed and worked out. And I think the important thing is the dialogue that exists, and that once we we do move the operations here, or having moved the operations here, that they're not empty shells. They're fully functioning institutions, and that's the goal.
We have 2.5 minutes left, which is not enough time to deal with the last issue. But Torry, you started touching on this issue of sort of convergence within the EU and beyond the EU's borders, and that is the angle that I wanted to take when asking you for your views on sort of next steps for the sustainable finance agenda. So we have quite a fully fledged, although patchy, framework that has been developed in the EU. How successful do you think that framework is? And are we potentially at risk of creating another kind of fragmentation, this time a fragmentation along international lines, when we have clearly a global problem to all deal with together?
So I think, being having a big emerging markets focused, we put out a paper last year called Just in Time, and it has to do with how much money needs to be raised in the emerging markets to get to a sustainability aspect. And the number is actually $95 trillion, which is more than the global GDP. So it's a significant number. So that's going to come down to, and we talked about it a little bit before, public and private partnerships, blended finance, everything else from that. But it's also going to come down to the regulators working in unison to make sure reporting is right, money is flowing. And you talked about wind farm in Denmark. Well, what about the wind farm off the east coast of Africa? How does that get financed? And that has to be, we have to have ECA involvement and other things. But equally, we have to have, and I'll go back to the point, you've got to have that convergence on the regulatory framework for what climate looks like going forward. Now, I think the EU and the ISSB are working on things to bring that together, and that's very positive. And I've heard some comments to the effect that there's good progress being made on that. But then that goes, how do you bring it to the US? How do you bring it to Asia? And this becomes not an EU thing, it's a global thing. We have to figure out how to make it work in the best way possible. And this is for what Björn was, for the good of society, for our families, for the future.
Absolutely. Thorsten, you're also chair of the ESMA Sustainable Standing Committee. How do you see this in that context?
It's very clear. We have an inconsistent framework right now. What we need is a consistent framework. The EU Commission has asked the three ESAs to come up with a call for evidence and their proposals on what the current situation is and how the possible definition could look like and how possible set of rules should look like. And that's exactly what we're going to do. There will be a progress report from multi-ESAs. I think it's due to be published in a week or so, where we will have a general common understanding of what greenwashing is and of course what green is. And we will have some sort of typological questions. And then we'll end up with a final report, I think in May next year. In this report, we will present what the three ESAs are thinking of what would be the right regulation on the European level. And that's exactly the right way to go forward in that issue.
We look forward to that report. Will it say anything also about the international aspects? Or will you is the scope looking at the EU framework?
That's the EU framework. But of course, that's one of the major frameworks. Of course, you have the whole international thing, but the world is not enough, so to speak. So therefore, let's try the EU level, and if we succeed there, I'm pretty happy.
Right. No, we're looking forward to that. I think that's a great initiative. Björn, final thoughts from you on this question, perhaps?
This process is a very important one, and I would say that we learn all from each other, and this is exactly what I experience on a daily basis when we're talking about the EU taxonomy, for instance, right? This is a dialogue that we're also leading internally, and I'm sure you would echo that in your institution at Stanchart. We're leading the way in Europe. And we're internally taking that discussion into our multinational institutions. And that's not always the same opinion that you have, but that's a healthy dialogue. We take
I think
it
the
there,
positive
it's a
thing is the
positive.
EU is leading the way.
Yeah.
Right, okay. Gentlemen, we're out of time. Thank you very much for sharing your thoughts. And thank you also to the audience for sharing your thoughts. I'm glad that we did manage to end on a note of positivism, one about integration, one about focusing on the sort of positives in terms of explaining the benefits, the public good nature of a capital markets union, the need that we have of that public good for greenization, as Björn said, and digitalization. And we look forward to seeing what the Eurogroup and then indeed the Commission and others will be delivering on over the next few years. So thank you very much. Please join me in thanking the panelists.
Thank you.
Thank you.